Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for January the 6th, 2010. Now our first position for tonight, we're going to be looking at the Financial Sector SPDR, the XLF. We can see that we have a crossover, a fairly fresh crossover from vantage point that's taken place here just above the 1440 range. So for tomorrow, we're going to be looking at buy positions on this ETF at 1475. Now our three levels of support are 1475, 1458 and 1452. Again, with this fresh crossover that's just taken place, this thing looks like it has room to extend much higher. Now what we're going to do now is we're going to go into the daily report. Again, the daily report we're using not only for entry points but more importantly for exit points. So what we're going to do here is have a quick look at this. We can see that we have 1474 as the low, 1511 is the high. So short-term day traders, they can look to get in at the 1474, get out at the 1511. However, your longer-term, medium and longer-term traders should definitely look for a move towards the $16, $17 range. So, and it's very important to look at the charts here. So we can see that we have this candlestick right here that spiked towards the 1570. That's a very good trade. Now if we can get 1570, if we can get $1, that's a good percentage trade. So again, we'll be looking at buy positions 1475 and looking for a move to 1511. Now for our next trade, we're going to be changing gears somewhat here, and we're going to be going into the foreign exchange market. Now for our second position tonight, we're going to be looking at the US Swiss franc currency pair. We've got our three predicted moving averages, 103.36, 103.52 and 103.28, which is a key level of support. We've got some volatility. However, we have this crossover from vantage point that's taken place on or about the beginning of December. We can see that we've experienced some volatility down off this 102.50, 102.60 range. Now the EMA has not made its crossover. The 3-day has crossed over the 8-day and attempted to cross over the 18-day. However, we can see it's now running flat. The 3-day is running flat right along the 18-day predicted moving average, this suggesting that we're going to get a move higher. Now for tomorrow, we're going to use the 103.28 is where I would like to use that. But before we make that decision, we're going to go in, consult the daily report to make sure that everything looks good there. Now with that said, we can see that we've closed 103.37, just a little bit above that 18-day predicted moving average. We have 102.81, 102.85, excuse me, and 103.81 is the predicted high. The neural index is now turned up after being down for 2 days. So 102.85 is where we're going to put our stops. We're going to put our stops below the 102.85, but we're not going to actually trade off that. We're going to be looking more towards this 103.28 area to hold, and we're going to get an extension higher from there. Now our target, I believe that we have room to extend towards the 105 area. Again, with the way that this 3-day is coming down over top of this 18-day predicted moving average, this suggests it's going to break and start pushing higher. We've had our corrected moves for essentially the last week and a half or so, and we should be now ready to extend higher. So again, long positions, US Swiss franc, we're looking at the 103.28 is our entry point. Stops will be actually below the 103.50 range, 102.50 range, excuse me. But again, we have our predicted low that's set for the 102.85. That's certainly possible. However, I believe with the move on the US dollar index that the US Swiss franc is actually going to continue to move higher. Now that's our second position tonight. Now our third position for tomorrow, we're going to actually change gears here again. Now for our third position, we're going to be looking at the Nymex natural gas continuous contracts. We can see that we've closed $5.63. Now what makes this one appealing is that we're very close to the 18-day predicted moving average. We can see that we have the one candlestick has come down, touched the 18-day predicted moving average from vantage point, pushed higher. Now 555 is our 18-day predicted moving average, 571 and 571 is the 3-day with a close of 563. So we've got some volatility here, which is good, and it's close to our 18-day predicted moving average. So what we're going to do is we're going to go in again to the daily report. We're going to look and see where our predicted low is from vantage point is going to be for tomorrow. We can see we have 554 is the low, 577 is the high. So when we get this pullback towards this 554, we're going to be looking to set our buy positions again. Now the reason why we're doing this is that our triple EMA crossover is not complete. We're still showing a buy signal. However, the short and the medium term, there is some downside pressure. So again, 555, we're going to be looking to get into buy positions, and we're going to be looking for, again, an extension back up towards this $6 range. So those are the market positions for January the 6th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.